high salary earners and CEOs get consistent returns in the stock market using a simple trend following strategy in just 60 minutes a week. Hi, and welcome to today's live stream. I will be covering the dollar index. If you have been following us, you would know that we have been covering the US dollar, Japanese yen, and the dollar index for some time now because they are displaying potential signs of weakness. At one point, the dollar index was at a pivotal point. It was either going to go further to the downside or bounce off support and move further to the upside. But as you can see through today, over to the charts now, and let me just minimize myself. So let's look at the chart that we have here, the free screen setup. The top left hand chart is the monthly time frame. The top right hand chart is the weekly time frame, and the chart here along the bottom is the daily time frame. So we always look at the monthly first thing. We go, let's jump straight into the monthly. I've enlarged this now. And what we can see here is that the candle for January is looking bearish. So bearish body along with above the candle. So there was some strength at the start of the month, but then the sellers pushed price back down below this support level. So this is the support level, which was previous resistance for this consolidation zone, and it's now resistance again as price has now moved below this level at $103. So the fact that price is back inside consolidation, it may just continue to move sideways as it has been doing since March 2015. Price may just continue to move sideways for several months and potentially over a year. So what we need to do now is just identify areas of support at monthly PIV9. This is our indicator of a major support or resistance level. And this currently stands at $100.83. And this is based off the high from March 2015. And we can see just below that we have the $100 major round number. So we have two major levels of support below price that could hold price. And if price does come down to this level and it stops, this may prevent price from falling. Then we may see a bounce to the upside and a move back out of consolidation. Although price has moved back into consolidation, this could just be temporary. We may see a bounce and then a move back out. But if price remains in this area for some time, then we may see continued weakness or an area of further consolidation. So right now, the dollar index is displaying signs of weakness, and we are going to take a look at the lower time frame. By the way, if you have any questions during this live stream, then feel free to message me in the chat box, and I will be having a look at that through the live stream. And also, if you want to see some of our analysis, more up-to-date analysis, then there's a link in our profile for our Telegram group, so feel free to join and filter colors. So when we see consistent red candles, we are seeing bearish moves. Consistent green candles indicates bullish moves, and grey candles indicate areas of consolidation and deep pullbacks. So right now we can see the bars have been consistently red, apart from this one in middle of November. Bars have been consistently red, so that we are seeing signs of weakness, clear signs of weakness here. And this week has produced a big bearish candle indeed. We had a very large candle back in early November 2022, and we can see another big potential. This may potentially grow even larger as we go. Actually, is the end of the week, so going into next week, we may see a large candle as well if we continue to see weakness here. And most importantly, we look at the daily time frame. The trend filter colors are similar to the the weekly. So green indicates bullishness, red indicates weakness, and grey indicates consolidation and deep declines, deep pullbacks. So what we can see here, I've left this support level here from this low from December 15th, because I did mention back then, if I just draw in another horizontal line. So I did mention that we were either going to wait for a break and close below support or a break and close above resistance to determine where price may head next. As you can see, when this high was formed, price moved further to the downside, and then the following day, January the 9th, we had a break and close below support at $102. Now, I did mention then that this could still be a fake breakout, but the fact that price has not only moved below the support, it has also closed below support. This helps us determine that we may well see further weakness. So the next 2 days we had indecision candles, price moved sideways, still lingering around this support level. And yesterday we had a strong push south. Price produced this big bearish candle. So today's candle so far is looking like a reversal candle, similar to the candles we saw following this bearish move on January the 9th. So we may just continue to see this pattern where we have a big bearish candle, some sideways movement before further moves to the downside. So price has now moved down another 1% since I last did a live stream on the dollar index, and we could still see further moves at least until $100. So this is the next major level of support that price may come down to and test before we potentially see a move back to the upside, or price may just come down to $100, struggle to break through, but then eventually push its way, and has been doing so, has been falling since September 2022, where we have seen this pattern of lower lows and lower highs. So the way we invalidate this bearish move would be a reversal. So it would be a pattern of higher highs and higher lows, and also we want to see previous highs being taken out. So if and when this high is taken out at $105, that will be our early indication that this bearish move has come to an end, and where we start to see a rise in price. And also note that the moving averages are all aligned. So the 20 is below the 50 simple moving average, and the 50 is below the 200 simple moving average. If we continue to see bearish moves, then we want to see the 200 simple moving average start to slope downwards, and that would indicate potential further weakness in this market. But the fact that the moving averages are aligned indicates potential further weakness in this asset. So now that we've identified weakness in the dollar index, we expect to see other US dollar related forex pairs also displaying signs of weakness or strength depending on how correlated they are with the dollar index. So let's look at the US dollar Japanese yen for January. Similar to the dollar index, they move very similarly. So price is looking weak here for January, and if we go down to the weekly time frame, the bars are currently quite some distance away above the 200 simple moving average, but clearly shown signs of weakness for this week so far. Prior to this week's move to the downside, this support level was holding from August 2022. So we had, if you look at the crosshair, price for the past three previous weeks was holding at this area of support, but we had a move to the downside this week so far. And on the daily time frame, we can see the bars are red here, and price in this case also broke down below this previous support level at 129.51. So yesterday we had a break and close below support, and today we've seen a further move to the downside. So similar to the dollar index, price is forming a pattern of lower lows and lower highs, and this will continue until we see a change in the behavior of this asset, where price starts to form a pattern to bars. We can expect signs of a reversal. Okay, so I've looked at the dollar index and the US dollar Japanese yen. If there are any charts you want to have a look at, then let's switch markets actually. Let's look at the chart for Bitcoin, because I have a monthly time frame first. So that may see price reverse. Over a year now, we've seen a decline in Bitcoin, and that's why it's been really quiet in social media. Normally when Bitcoin is rising or the cryptocurrency is rising, everyone's talking about it, but when it's falling to talk about crypto, they only talk about crypto when it's at this peak, and that's when it's too late. This is the time you want to be focusing on this market particularly. So price is displaying a bullish candle for January, and if we look just above price, we have major levels of resistance. The first one is this monthly PIV9, and this is from the high of December 2017 at a level just below the round number, which is the other major level of resistance. So we have the monthly PIV9 and we have the $20,000 rounds number just above, which may act as a major level of resistance, prevent strong move above the lows. If we look at the weekly, November 2021, it was a strong move to the downside until January 2022. Then we had this pullback, and then we had another decline, even faster, 42. And since June 2022, price has continued to decline, but at a much slower pace, almost sideways to down, as opposed to these steep moves in the past. So price appears to slow down in momentum, which again reinforces the fact that we may have found a base in this crypto market, and if so, we should start to see a strong move back to the upside. So this week's candle is looking strong at the moment. As I mentioned, the $20,000 rounds number is above, so we need to see that broken, and above there we have the 200 and the 50 simple moving averages. On the daily time frame, so if I just go through these drawing. So this green shaded area is the initial area of consolidation where price started to slow down, and below this consolidation area, price then formed another consolidation just below this previous one, and price continued to move sideways here. A much smaller area of consolidation, and price has now moved back into this previous area of consolidation. And want to also highlight, I drew in this trend line from the high of August 15th to the high of November 5th and projected that forward. On yesterday's candle, so I did an analysis yesterday. Yesterday's candle price was actually holding just at this intersection. So this was acting as resistance. And I did mention that if we have a break through this major level of resistance, then we should continue to see moves to the upside. And price has done that so far. It did appear at the time that we were going to see a move back to the downside, but instead the buyers have been strong enough to push price through. But what we can see before the $20,000 rounds number, we have another major level of resistance. So we have the 200 simple moving average. If I just zoom out, we can see how strong the 200 simple moving average has been as a level of support and resistance. So we had a resistance level here. Price used the 200 as resistance back in March 2022, and it was used as support here in December 2000. Price now makes its way above the 200 simple moving average. So this will be an important indicator to tell us where price may head next. If we are likely to see strong moves to the upside, 100 simple moving average on the daily, a move above the $20,000 rounds number, then we want to see a push up, a pullback, and then a second breakout above a previous high, and that will be our initial indicator that price is likely to continue to rise going forward. As for now, we want to see how the 200 simple moving average will hold, and if it does hold, then we may just continue to see areas of consolidation. But remember, price is coming into a tight squeeze, and eventually we're going to see a breakout either to the upside or a breakdown below support. Okay, so I've covered the dollar index, the US dollar, Japanese yen, and Bitcoin. The main analysis was for the dollar index, which is showing signs of potential weakness. So we want to see if price will continue to decline and move down to the next level of support. Before I end the stream, I'm going to just look at two more charts. Euro dollar, and then we're going to have a look at the pound US dollar. So a quick look at the monthly. This is moving in the opposite direction of the dollar, because when the dollar is weakening, the euro is getting stronger. So a small bullish body for this month's candle. And if you look at the weekly, but remember, price is still in long-term area of consolidation. On the weekly, the bars are green, and price is now moving towards, move towards the 200 simple moving average. And on the daily time frame, we had a break and close above this resistance level at 1.0736, and price broke and closed above this level on January the 11th. We had a fake breakout on 9th and 10th of January, but on the 11th we had a break and close, and then the following day price moved further to the upside. So potential continued strength for the euro dollar, because prior to this bullish move, the trend was down, forming lower lows and lower highs. And remember what I mentioned on the dollar index. Once we start to see a change in the behavior of an asset, we started to see a pattern of higher highs and higher lows. That helped us determine that we are likely to see further moves to the upside. So this does move in, although we are in a large area of consolidation. Within the consolidation zone, the euro dollar does tend to form some strong trends. So we need to keep an eye on the euro dollar, because if a trend to the upside does form, then we should see nice, neat pullbacks and breakouts to the upside going forward. And that's the pound US dollar. And if I just bring up the monthly first, a small bullish body for this month's candle, but this is displaying as a reversal candle. For now, we had a nice bounce from this monthly PIV9 support, which is formed from the low of October 2016. Price bounce of this level and has started to move to the upside, and also bounce of the 1.20 major round number. On the weekly time frame, the bars are red. Price is below the 50 simple moving average, which may act as resistance, and price is below the 200 simple moving average. And on the daily time frame, the bars are currently green, and unlike the other assets we've looked at, price hasn't broken above a previous high. So if I just draw in a resistance level here from the high of December 14th, so we're waiting for a break and close at this level at 1.2446. If price is able to achieve this, then we're likely to see further moves to the upside. So that covers today's live stream. No questions today, so it's a really quiet evening for you all. I know it might be late for some of you. Some of you may just be finishing your trading day if you are day traders. We are more longer term investors, so we hold positions for several weeks, months, and potentially over a year. So in the forex market, we hold on to positions for a few months and sometimes a few weeks, depending on how long the trend lasts. But with stocks are our main we have more stocks in our portfolio than any other asset, and stocks we usually hold on to positions for up to a year. So it could be a few months, but mainly over a year. Okay, I just wanted to use some more time in case there were questions coming through. If you have any questions following the end of the live stream, if you are watching the replay, feel free to still type in a message in the chat box, because we will still look at the chat box messages and get back to you as soon as possible. Well, I hope you all enjoyed today's live stream. Don't forget to click on the link in our profile. Follow us. The follow button is in the top right hand corner of the stream page. So feel free to follow us so that you can get all of our analysis as soon as they are available, and also alerted to our live streams when we go live. And if you want to join our Telegram group, which is free to get all new updated analysis, then feel free to click the link below should be below the video. Yes, below the video, this live stream video. If you click on the link below the video, you should see a link to our Telegram group, and feel free to join us and say hello once you enter. Okay, I'm going to end the live stream here. See you all on the next live stream. If you click follow, you will be alerted as soon as we are going live.